Now, moving over to the charts, I think it's only fair now to go over to the metals. First of all, you can see here gold has had this classic move that we often see over the first week of the month. So if we go over and have a look at the weekly chart, you'll note we've broken above last week's high. In fact, last week we saw the move early. We actually got into a trade last week on Wednesday was our entry on this position. Normally we see this move start approximately around the first week of January, the first trading day. But this year actually started earlier. All of our indicators gave us the confirmation to buy gold last week. And currently the trade is up over 300 points profit. You can see gold here trading at now 4-week highs, currently trading at 1,177 US dollars per ounce. It's forming a really nice base here, 1180, the next key level of resistance here. And you can see on the weekly chart where we've got this nice basing formation, we essentially didn't see the break that was a move which was potentially seeing a move down all the way to the 1100 zone if we saw follow through following on from the FOMC statement. But we didn't see a breakdown as significant as that. So a lot of the move with gold here, the breakdown after the interest rate hike, had already been priced in. We saw a move down to the low 1120 level for gold, but you will note we've held on to this zone on a closing basis at 1,130 US dollars. We're now very close. We came up to 1,179 US dollars per ounce just overnight during the Asia Pacific session, and certainly in the short term, this looks like we put in a short-term low at the moment. If we go over to the daily chart, you can look at the basing formation here. Now, in terms of key levels, so 2 questions which I'm getting a lot at the moment. Number 1, where can you enter if you've missed the move? Number 2, what should be your profit target? Okay, so I'll address those 2 questions. Number 1, where should you enter if you missed the move? Well, we have non-farm payrolls tomorrow. Could provide some volatility, could provide a pullback. I certainly wouldn't get into gold whilst it's getting into this short-term overbought condition. I'm expecting more upside for gold, but from a risk reward point of view, entering right at the highs here is not a good move. If we could get a additional pullback now, could be on non-farm payrolls or next week. We've had several days now of consecutive high lows and higher highs here for gold. It's been about 10 days almost in a row here, 7 to 10 days that we've continued to see consecutive higher highs and higher lows here over the last week and a half. So it is moving well, gold, in terms of this breakout to the upside. If you're long at the moment, it's moving well. 1178 at the moment, so we look like we're on target to hit 1180 very shortly. The next levels I would look at are going to be 1180, 1185, and then above 1185 there's clean air up to 1200. Beyond 1200, that will be important. That is where the price meets the 50-day moving average as well. It's also a Fibonacci retracement level around that zone, so 1200 will be a key level. If we do manage to, possibly we'll consolidate if we come up as high as that in the short term, and then once we break above that level, if we do see an additional break above the 1200 zone, I'm looking for a retracement up to the 50% Fibonacci retracement level, which was the high going back to the US election where we saw Trump win, and we got a spike high of 1,337 US dollars going down to the low, which was from the FOMC statement, an increase in interest rate. With that, we saw a spike low going down to approximately 1,120. The 50% Fibonacci level of that retracement takes us up to 1,230 US dollars. I've also got best case scenario, the 200-day moving average targeted. It's going to be a moving target. It will continue to move lower, the 200 MA, as it catches up with the fall in price from the November elections down to the lows of December. And that currently sits as approximately between 1,255 US dollars up to 1,270. So at the moment, we're taking advantage of the January effect. We're getting a few questions now. Is this the bottom of the gold market? Is this the low? Has that been put in right now? Just having awareness of seasonal patterns, how the markets move at this time of year is quite important. If you've been trading gold for a number of years now and you're aware of this seasonal impact in the market, not just that, we've also seen additional inflows into this. You've got correlated markets, which include gold against the euro, which is leading gold against the US dollar. 10-year bonds have been performing very well. Also, the US dollar index has had a bit of a corrective move over the last couple of sessions here. If we have a look at the US dollar index, you will see where it's broken down over the last couple of days. Had a spike high earlier on this week, broke out to 14-year highs, and over the last couple of days it has broken down back below the 21-day moving average. Just today, in fact, you can see it's starting to roll over and break down here. If we have a look at that on a weekly chart, you can see large rejection candle developing a spike high. I would suggest on a weekly chart, that's a bull trap, breaking above the 14-year highs, only to then retrace, breaking back below the last 2 weeks worth of lows here at the moment. So US dollar index is looking relatively weak here, and as you would anticipate, off the back of that, gold has had quite a significant surge.